When you buy a stock, your order goes to a centralized exchange where buyers and sellers are neatly lined up. But trading on decentralized crypto networks is scattered, chaotic, and often isolated. Liquidity, the actual pool of capital, doesn't sit in one place. It is spread across dozens of different exchanges. If you try to place a large trade on just one of them, the market simply won't have enough capital to absorb your order at your target price. As a result, you pay a hidden cost called slippage. This happens when your trade eats through the available orders, forcing you to buy at progressively higher prices, eroding the value of your transaction before it even completes. Without a way to bridge these isolated pools of capital, decentralized finance actively penalizes users trying to move large volumes. The bigger your trade, the more you lose to these market inefficiencies.
On the Solana network, Jupiter addresses this market fragmentation by unifying these isolated liquidity pools into a single interface. Jupiter functions as a master aggregator that sits above the market. It doesn't operate as a single exchange. Instead, it acts as a highly advanced search engine for trades. Its engine is so deeply embedded in the ecosystem that it now routes almost every single decentralized trade happening on Solana. By functioning as the network's central nervous system, it mathematically guarantees the most efficient execution possible without taking on the risk of holding the assets directly. To understand why it captured so much volume, we have to look at the exact millisecond you click swap on their platform. Jupiter instantly pings every liquidity pool across the Solana ecosystem, mapping real-time prices. Instead of sending your order down one path, it intelligently fractures your trade, routing smaller pieces through multiple exchanges simultaneously, taking the best rates before recombining them in your wallet. By dividing the load across the network, it prevents your order from overwhelming any single pool, neutralizing the hidden cost of slippage. This mechanical efficiency made Jupiter a requirement for any serious trader. Because bypassing these routes meant losing money on every swap, the platform became the default infrastructure for the network. Once they secured the routing layer, the development team began aggressively expanding their product offerings into new markets. Because of their routing dominance, their API became the default standard. Today, if you swap tokens inside an external crypto wallet or an independent Solana app, there is a very high probability that Jupiter is processing the trade under the hood. They leverage that massive retail footprint to launch complex financial products, including a high-volume perpetuals exchange, where users can trade leveraged futures contracts directly on-chain. They built out dedicated retail tools, rolling out automated recurring buys for dollar cost averaging, alongside a launchpad dedicated to debuting brand new tokens. Mastering the routing layer gave the team the leverage to capture the entire vertical stack of Solana DeFi, building out a comprehensive suite that supports the full lifecycle of decentralized trading. All of this utility generated enormous attention for their native token, JUP, but assessing its actual value requires an examination of its underlying economic structure. This gauge shows the token's current distribution. Right now, there is an active supply of 3.3 billion JUP tokens. That supply sits inside a strict maximum cap of 10 billion tokens. Multiplying that by the current price gives a market capitalization around $770 million. That massive scale dictates its valuation limits. Moving a project nearing $1 billion in market cap requires immense, sustained capital inflows to push the price higher. That brings us to the immediate price action, with the token recently trading around the 23-cent mark. This chart tracks JUP's recent performance. Over a 7-day window, it climbed 24%, pulling up aggressively from recent lows to establish short-term bullish momentum. However, zooming out, that weekly jump shrinks. The token sits roughly 88% below its all-time high of $2. Jupiter is undeniably genuine, highly utilized network infrastructure that the Solana network actively relies on. Yet its market valuation continues to carry the weight of those massive early highs. Utility in crypto does not automatically equal guaranteed returns. This is not financial advice, and you must always do your own research.